Welcome to today's market report. European stock markets edged lower on Monday as investors weighed concerns over a rise in global inflation as well as disappointing Chinese economic data. DAX in Germany traded 0.1% lower, CAC 40 fell 0.1%, FTSE 100 dropped 0.3%. European stock markets struggled last week after US consumer prices jumped at the fastest rate since 2008, increasing worries that the Federal Reserve could be forced to start tapering its easy monetary policy earlier than guided. This weak tone has continued on Monday after data showed that China's economy, the second largest in the world, is continuing to grow, but the recovery from the COVID-19 pandemic is uneven and still has a long way to go. Chinese industrial production grew 9.8% year-on-year in April, a healthy increase but lower than March's 14.1%, and retail sales increased 17.7% in April year-on-year, below March's 34.2% growth. Ryanair stock rose 0.8% after the budget Irish airline said there were signs the recovery had begun even as it reported a record annual after-tax loss due to COVID-19 restrictions, forcing it to scrape over 80% of its flights last year. The airline wasn't able to give formal guidance for the current year due to uncertainty over the pace of reopening in Europe. Stellantis stock rose 0.9% after the automaker said it would announce a strategic partnership with iPhone assembler Foxconn on Tuesday, likely involving the building of electric cars and internet-connected vehicles in China. Bayer stock fell 1.8% after the U.S. Federal Appeals Court upheld a $25 million judgment and trial verdict, finding the company's Roundup caused a California resident's non-Hodgkin lymphoma. Italian consumer price data are due later in the session, the highlight of Monday's thin European economic data slate. Oil prices edged higher on Monday, continuing the recent gains as China and the US, the two biggest oil consumers in the world, and most of Western Europe reopen in the wake of successful COVID-19 vaccination programs. US crude futures traded 0.2% higher at $65.50 per barrel. Brent contract rose 0.1% to $68.78 per barrel. The two contracts jumped near 2.5% on Friday and managed to book a small gain last week, marking a third consecutive weekly increase. Gold futures rose 0.9% to $1,853.75 per ounce. On the FX front, the GBP-USD pair faded an early European session spike to three-day tops and quickly retreated below the 141 mark in the last hour. Following a brief consolidation through the early part of the trading action on Monday, the pair regained traction and built on last week's goodish bounce from the key 140 psychological mark. This marked the second day of the positive move and was sponsored by the emergence of some fresh selling around the US dollar. The US dollar was being weighed down by Friday's disappointing US retail sales data, which reaffirmed the Fed's dovish view and forced investors to trim their bets for an earlier than anticipated tightening. This, along with the ongoing decline in the US Treasury bond yields, further acted as a headwind for the greenback. Even a softer tone around equity markets aimed worries about the continuous surge in new COVID-19 cases across Asia did little to lend any support to the safe haven greenback. On the other hand, the British pound was supported by an optimistic economic outlook amid the gradual easing of restrictions in the UK. Britain relaxed restrictions on its economy and social contact further, effective this Monday. Among other measures, people will be allowed to hug each other again, and pubs and restaurants will be able to serve customers inside. This helped offset worries about the fast-spreading Indian variant of the virus. Uncertainty, however, over the post-Brexit agreement on Northern Ireland held bulls from placing aggressive bets around the GBP-USD pair. Reports indicate that Ireland is increasingly concerned that British Prime Minister Boris Johnson wants to completely rewrite the Northern Ireland section of the Brexit deal. In the absence of any major market-moving economic releases from the UK or the US, it's prudent to wait for some follow-through buying before positioning for any further appreciating move. Meanwhile, the market risk sentiment and the US bond yields might influence the US dollar price dynamics, which might provide some trading impetus. The euro looks to add to Friday's gains and lifted euro-dollar to the 121.50 region on Monday, just to lose some momentum soon afterwards. Following the strong gains recorded on Friday, euro-dollar started the new trading week on a mixed mood, although still well above 121 the figure, and always against the backdrop of diminishing yields and alternating risk trends. The safe haven dollar was supported by concerns over fresh COVID-19 outbreaks in some Asian countries. However, gains are small ahead of the minutes of the latest Federal Reserve meeting. The dollar index was up 0.1% at 90.382. Dollar yen was down 0.1% at 109.30. Aussie dollar fell 0.3% to 0.7753. This is today's market news. Thanks for listening. We'll see you next time.